The current tax system, if you think about it, is essentially a penalty on what you produce. We tax your work in the form of an income tax or a payroll tax. And if you work for somebody else, your money gets taxed. But
you and I were boys back in the Midwest.
Right.
Governments, federal, state, and local, were only taking about 15 cents out of every dollar earned. Today, they're taking almost half of every dollar earned in the United States. And most people don't realize it because the taxes are hidden in the so-called business taxes. You know, the politics.
He flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we, as a central bank, we have the ability to create money.
How can you have energy companies that profit when there's an energy crisis, military-industrial complex that profits when it's a war, pharmaceutical companies that profit when there's a pandemic? You're creating the necessity for ongoing crisis.
Yes.
If the elites in a society...
Who's winning in this economy right now?
The rich. Guys like me. You know, we have gone from having 93 billion, top 400, in 1982 to having 2.4 trillion, 25 for one.
Financial literacy is like a language. For example, if we ask you, live in Japan for a year, and you don't know anything about how to speak Japanese, what's more effective? Us giving you Japanese classes 1 hour a day in high school, or we send you where I was stationed at in Okinawa, Japan. I just had a guy in my workshop this morning. He's 57 years old. You know what he says? I don't have anything to say for retirement. He's 57. He's got 8 years to the typical retirement age. He said, Matt, what would you say to me? I said, you better bust your tail. You better consider entrepreneurship, because here's the thing. The typical way to save for retirement is to save 10% of your income. This is free enterprise. This is free will. This is America. This is capitalism. Free to buy, free to sell, free to win, and free to fail. You're in the idea, in this experiment of freedom, which is called the United States of America, where people can be what they want to be, regardless of what you think you're at right now. If someone's looking to propose to you an opportunity, if someone's looking to recruit you, amen. You want people coming at you recruiting. You want people coming at you proposing things to you. Why? Because they see you as a player in their eyes. You should flip around the question. I appreciate you trying to recruit me to your basketball team, your church, your company.
$1 million in, take $1 million out. How much is left in the insurance policy?
Zero.
No, $1 million.
Then that's
so
the part
let me
I don't
explain
get.
that.
Why would an insurance company borrow my $1 million for 30 days and then let me take it back and still have the policy?
When I bought 4 cars through my life insurance retirement, I don't pay any interest to any bank out there. We just got a Rolls Royce delivered to the office. I took the cash from our policy, paid the dealership with it. What I would normally pay the bank, I just paid that back to my life insurance policy. So I lost no interest. Better.
What do the rich buy that the poor don't even know is available for purchase?
Trusts and annuities. Trust can be done in several different ways. You can have your house owned by a trust, your cars owned by a trust, a company owned by a trust. That way you don't own everything, and if something happens to you, someone can't take everything you own. 2, annuities. Annuities are insurance products that are contractually guaranteed. The best part is whenever you marry the two, you create a trust fund. So imagine you had a trust, and that trust owned an annuity. Now that trust will pay out whatever percentage is returned every year. Well, how does somebody that is low income do something like this? Trust is not free. You have to set it up, you have to pay for it. Let's say you had term insurance of $1 million, and you had the trust own the proceeds or the beneficiary. Then instruct the trustee to create an annuity with your $1 million term payout. If you want to guarantee, then you're going to have to do a whole life or an index universal life policy, something that's going to last forever. Then the trustee adds every family member that you'd like to be in that trust. Say that trust earns 7% per year, they only pay out 5% to all the family members, that 2% growth. Over 50 years, you could create a humongous account for your family tree. If this is something you could see doing long term, reach out.